What is going on, everybody? Welcome back to Finance with Parks. In today's video, we're going to talk about how to approach investing in 2023. Let's get into it. Welcome back to the channel. If you're new here, please consider subscribing. We talk all things personal finance. Like I said today, how do we invest our money over the next year? Before we get into that, let's start quickly with how did we get here? How did things go in 2022? And spoiler alert, they didn't go very well in the stock market. The market is down 19.7% from the start of the year. That does have 1 week to go. And when I say the market, I mean the market benchmark. That's normally the S&P 500. What we're going to talk about today is the Vanguard version of that. The VU is the ticker. So what that means is if you started with $1,000 in your account this year, it's now down to $803. And that stings. It's hurt retirement accounts. It's hurt individual accounts. It's really been a tough year in the stock market. And so what can we look forward to in 2023? Unfortunately, the story does not promise to be that much better. Many financial experts are expecting a recession in 2023, or at least for this downturn to continue. The reason being is that inflation is still extremely high. You all have probably seen it in your personal life, right? Gas is expensive, housing prices, etc. And so in order to combat that, the Federal Reserve is still planning to raise interest rates. Long story short, as interest rates rise, it discourages people from borrowing money in an attempt to try and help bring prices back down. Well, that puts us into kind of an ugly spiral because as less people, spend money, companies have a hard time, they're doing less in sales, etc. And what we've seen that translate to is job layoffs. Companies like Meta, Amazon have let a lot of their employees go. So I don't want to start off the video on the super sour note because I want everyone to remember, let's just set ourselves back for a second and look at what have the historical returns in the market been. This is the VU again, so you can see by year the percentage return. Look at these phenomenal numbers. It's not all bad news in the grand scheme of things. Yes, 2022 is going to be a black eye to this chart at negative, 20%, give or take. But in the grand scheme of things, we really have seen some great returns over the last 10 years. And so remember, there's pluses and minuses, but on average, if you average the last 20 years, the VU has returned about 10% if you reinvest dividends. So some pretty solid numbers there. So even though 2022 has been poor, and if 2023 continues, well, what are we going to do over the next year with our money? We are going to buy more. We are going to buy the S&P 500 because a drop in prices brings buying opportunities. Everyone's probably heard the adage buy low and sell high. It's just so much easier said than done because of human nature. Right now, if you turn on the news, it's the things like I talked about earlier, right? The stock market sucks. Prices are falling off a cliff. Do not invest your money in the market. It's like gambling. So when things aren't going well, everybody hears, oh no, I want to stay away. So people aren't buying more stocks. But the flip side is true as well. When things are going well, people get burned that way, right? If you look at this time here, you were hearing things on the news that were the opposite. The stock market is great, everything's going fine. And then all of a sudden people get caught up in that and buy in this time frame here. All of a sudden the market falls off a cliff and you're caught, looking at a poor return. So let's block that out as far as the returns in the short-term time period goes, and let's look long-term. And so for me, long-term, we are getting a great price right now. This is totally a buying opportunity. And again, invest at your own risk. This is just my personal opinion. This is my approach, but I wanted to share it with everyone. And so playing devil's advocate for a second, though, let's address this question. Well, if we expect a further market drop, why shouldn't we just wait? If we think things are going to continue to get worse in 2023, let's wait to buy in at the very bottom. Well, again, this next bullet, right? Timing the market is just near impossible. Everyone would love to be that person that buys into the stock market right here and then sells up here at the very top. But that is just so hard to do in execution. And one of the reasons for that is this is not a full-time job for me. So I can't sit at my computer and wait for these opportunities to come, because look how quickly the recoveries happen. These are not, sustained valleys where you have a long opportunity to buy in these time frames. They hit this bottom and then spike back up extremely fast. And so I'm not going to be able to time that. And So that further rationale is 19% discount. It may not be perfect. It may not be our best entry point, but it's still a good one. It's still a good deal in the grand scheme of things. And so if you look at this chart, anywhere in here, right, in my mind, is still a good buying opportunity because you're getting a discount from the top of the market. And you look historically, this chart goes back to 2010. It hasn't been a perfect straight line, but over time it has continued to rise. And so that's, we can't guarantee that going forward, unfortunately, but we use history to our advantage, and historically it has continued to climb. And so all of this section in here, in my mind, is a good buying opportunity. All right, so how do we bring this all together? So I want to say something that I understand people get frustrated with during this time frame. I'll call it personal finance social media. Well, yeah, if I just had $500,000 sitting around or $100,000 sitting around, I'd love to invest in the stock market with that extra money. But I want to pull that down to a smaller scale. Investing is going to be difficult, but it is possible, even on $25. Unfortunately, the best time to buy stocks comes during economic downturns, which carries a time period where having discretionary money is a lot harder. There aren't a lot of families right now with the prices of gas, with the prices of homes that I mentioned, that have this extra side pot just waiting to go into the market that they don't need, and I totally understand that. But again, let's keep it on a small scale. And remember, any leftover money you have, even if it's $25 a paycheck, investing in the VU or the S&P 500 will be beneficial over the long term. And let's clarify, when I say long term, less than a 1-year time frame, that would be the one caveat I would not recommend stocks for. It's got to be, a 3 to 5 year time period, I would say, is perfect. Because if we just go back to this chart for a second, you can see there are some peaks and valleys here, right? Over this grand scheme of 12 years, it's gone up, but year to year, you're not always guaranteed to see those kind of returns. So trying to time it in a 1-year time period, if you have a wedding coming up, for example, or you have mortgage payments that you got to take care of, this is not the strategy for you. You're going to want to sit, on cash in your bank account. The stock market is just not for that 1-year time investment. And so skipping back, so less than a 1-year time frame, but what do we buy, Michael? I've said it multiple times in this. There's 2 options that I would highly recommend. The first one is the VU from Vanguard. You can buy that in pretty much any normal brokerage account. But the second one is also a really good option, is the VTI. It's also from Vanguard, and it is more of a total stock market index fund. The VU is just 500 of the top companies in the US, and the VTI is more of a broader portfolio. But both of them are great options. I do not pick individual stocks. If that is your thing, then be my guest, but it's just not something I've ever dabbled in, and I've always stuck with index funds because I think they're your best option for the amount of risk and the amount of return. So hopefully that's all we had today. Hopefully you enjoyed this video. If you did, if you could smash the like button and subscribe to the channel, we would greatly appreciate it. We also have a link down below to a personal finance book that we wrote. It's more of a PDF, but the top 10 things you should know in personal finance, and it covers investing like this. Thanks again for watching, and remember, finance is fun. See ya.